We're continuing our Future Fund stock series. If you've missed the memo on this, for the next 2 weeks, this week and next week, I've asked our guests to suggest a stock to put in the bottom drawer to help pay for the monstrous costs of raising children. If you like, an education fund. As a granddad with a daughter and daughter-in-law delivering in November, so it's a very exciting time. I keep saying, oh, the cost of education going forward. So I'm looking at a long-term, high-quality portfolio play. So I'm asking each of our guests this week and next week, what would they suggest that they'd put in that portfolio? Now, these two have cheated a bit today because I suggested more than one. So I'm going to put, I'm going to put the hammer on you both and say you've got to choose one to add to the portfolio of the other guests and experts we have on the panel. Andrew, what would you put in?
Damn it! I was hoping to cheat a little bit there. I do love the exercise though. I think what's great about it is that it frames it instantly for the very long term, which always forces you to make, I think, smarter, more calm, more rational investment decisions. So whether or not it's for education or whatever it is, I think this is the mindset that you should approach. So I went for a couple of boring, safe ones elsewhere, but the one I'll throw out will be a little bit spicier. It's a pretty small company called Kip McGrath. These guys do tutoring franchise operations, family-run business, been around for ages. Doubled revenue since 2013. The profits about tripled since then. Took a bit of a knock with COVID, but the online part of the business has held up really well. Just very savvy operators. I think there'll be a bit of a pickup in face-to-face learning when this thing all washes through, and there's a long runway for growth. A lot of smart investors I know like it, so I think it's worth having a look at. And shares have come back quite a bit lately too, so that makes it a bit more compelling.
So there's a bit of synergy when you're complaining about the high cost of education. You can go, well, I'm getting a bit of that.
Exactly.
In an education. I like the way you think. Michael, what would you put in the portfolio?
So I gave you two options. So technically,
you tried to cheat
but
too.
there was a reasoning behind it. There was one ETF, so that's not technically a stock, and then I suggested CSL. The hard thing with an individual stock is that over time, there's going to be change in news flow. The reports are going to vary from time to time, which might alter your decision on your view of that particular company.
And
so
ETF's
it's always
fine. Scott Phillips from Motley Fool suggested the beta shares NASDAQ 100, the NASDAQ 100 ETF yesterday.
I'm suggesting the S&P 500 because you get a bit of both. You get a bit of the NASDAQ companies and you get some of the Dow Jones as well. And that over the long term should do very, very well for people. But if you're looking for an individual stock, it's hard to go past the previous winner, if you like, CSL, which has proven to be a very good long-term performer. A company of that size, which continues to compound its earnings growth at double digits each year, should continue to grow quite nicely. So that's my individual stock of choice.
So Kip McGrath and CSL, as I said yesterday, we had the Beta NASDAQ 100 ETF and Technology One from Mark and Scott. And then Monday, Gaurav and Mathan had Wesfarmers and Family Zone. So an interesting collection of stocks there for it.